Welcome to Investero. Investing $1,000 into crypto in 2025 can feel both exciting and overwhelming. The crypto market is filled with opportunities, but also risks. And the way you allocate this amount could determine whether you build long-term wealth or face heavy losses. With the right strategy, even a relatively small investment like $1,000 can grow significantly over time. Provided you diversify wisely, manage risk, and stay patient. Let's break down how you could approach investing this amount in today's market. The first step is understanding that crypto is not just about Bitcoin or Ethereum anymore. While these two remain the most dominant and reliable assets, the ecosystem has expanded massively into decentralized finance, Web3, NFTs, AI-related tokens, and gaming projects. To build a balanced crypto portfolio with $1,000, you'll want a mix of safety and growth potential. That means dividing your money between established coins, mid-tier projects, and smaller high-risk plays. A smart allocation strategy would be to put about 50% of your investment, or $500, into Bitcoin. Bitcoin is the foundation of the crypto market. It's the first digital currency, the most recognized, and still the most secure. While it may not offer the explosive gains of smaller tokens, Bitcoin has consistently outperformed most assets over time, and institutions increasingly treat it as digital gold. By putting half of your capital into Bitcoin, you're anchoring your portfolio with stability. Next, around 30%, or $300, could go into Ethereum. Ethereum is the backbone of decentralized applications, smart contracts, and NFTs. It has proven staying power, when with constant upgrades like Ethereum 2.0, improving scalability and efficiency. It's positioned for long-term success. Many of the biggest crypto innovations are built on Ethereum, and institutions are also accumulating it. Holding Ethereum gives you exposure to the entire decentralized application economy. That leaves $200 for altcoins, and this is where growth potential comes in. Altcoins can multiply your money much faster than Bitcoin or Ethereum, but they also carry higher risks. A good way to diversify this $200 would be to split it among 3 or 4 strong projects. For example, you might allocate $70 into Solana, which has become one of the leading smart contract platforms with ultra-fast transactions and low fees. Solana has a thriving ecosystem of DeFi apps, NFT marketplaces, and even AI integrations, making it a solid choice for growth. Another $70 could go into a gaming or metaverse token like Immutable X or Gala Games. Blockchain gaming is expected to grow significantly in the coming years. And if the industry explodes, these tokens could be among the biggest winners. For long-term growth, it's worth holding a piece of this sector. Next, you could put $30 to $40 into a decentralized finance project, like AB or Uniswap. DeFi continues to disrupt traditional banking by allowing people to borrow, lend, and earn interest without middlemen. These platforms are pioneers, and if DeFi adoption accelerates, their tokens could rise massively. Finally, you might put the last $30 into a riskier or emerging project. Perhaps an AI-focused crypto like Render or Fetch.ai. Artificial intelligence is rapidly becoming integrated with blockchain, and early exposure to these tokens could pay off if the trend continues. But no matter how you divide your investment, risk management is crucial. Crypto markets are extremely volatile. Prices can swing 20% or more in a single day. That's why you should only invest money you're comfortable losing. And you should avoid putting your entire $1,000 into just one coin, no matter how confident you feel. Diversification gives you a safety net. Another important strategy is dollar cost averaging. Instead of putting all $1,000 into the market at once, you could spread your investment over weeks or months. For example, you might put in $250 each week for 4 weeks. This way, you're less affected by short-term volatility, and you average out your entry price. Storing your crypto securely is just as important as choosing what to buy. For $1,000, you could use a reliable exchange wallet, but ideally, you should invest in a hardware wallet for maximum security. A hardware wallet like Ledger or Trezor ensures your coins are safe from hacks. Think of it as buying insurance for your investment. You should also decide whether this is a long-term hold or a shorter-term trade. Historically, the biggest profits in crypto have come from long-term holding. If you invested $1,000 in Bitcoin 5 years ago and simply held it, your money would have multiplied several times over. The same is true for Ethereum. Short-term trading is much riskier and requires constant monitoring, so beginners are better off adopting a long-term mindset. Looking ahead to 2025 and beyond, the crypto market could face both huge opportunities and challenges. On the positive side, institutional adoption is growing. More governments are exploring crypto regulations that may legitimize the industry, and technological innovation continues at a rapid pace. On the risk side, regulations could also restrict certain projects. Scams remain common, and market crashes are always possible. By diversifying your $1,000, you're preparing for both scenarios, protecting yourself against losses while keeping exposure to growth. To summarize, a practical $1,000 crypto investment in 2025 might look like this: 500 in Bitcoin for stability, 300 in Ethereum for long-term growth, and 200 in spread across Solana, a gaming project, a DeFi token, and an AI project. This kind of portfolio balances safety with upside potential. The key is patience, risk management, and security. If crypto adoption continues, even a $1,000 investment today could become several thousand by 2026 or 2027. It's about thinking long-term, ignoring short-term hype, and choosing projects with strong fundamentals. For beginners and small investors, crypto is still one of the rare spaces where a modest investment can potentially lead to life-changing returns. The journey requires discipline, but with the right approach, $1,000 in crypto could be the start of building generational wealth. Subscribe to invest.